Except if they soon you'll get drenched to the bone. If your time is worth saving. All right, welcome traders and investors. Todd Gordon here. Hey, just a quick video update. Kind of show you what's going on in the markets. Also, I do want to invite you to a full webinar that we're going to do this Thursday. I'll give you more details about it. I haven't done one. I don't know. It's probably been a year. So with phone coming up, but let me show you what's going on. Kind of give you some market updates here, and see if we can't figure out what's going on. All right. Make sure you check out those disclosures, and we'll get rolling. So, yeah, I was throwing a little Bob Dylan in there. Times they are a change, and so is the market, finding the inside edge in the AI revolution. It's unbelievable what's happening in the markets right now. So here's what we're going to cover in this intro video. So again, I won't hold you hostage here. The one thing I'm going to ask you to do is consider joining us for a full-blown webinar this Thursday, 8 p.m. Eastern, New York time, 5 p.m. Pacific. We're going to talk about investing in the AI revolution, how to profit from it, how we're positioning our wealth management business, which is Inside Edge Capital. We'll talk about the transition from TradingAnalysis, which was my former research business that ran for 12 years. Talk about that move from TradingAnalysis, which many of you followed. If you're on this list, I think, you did business with us at some point in TradingAnalysis. Talk about that transition into Inside Edge. And as I mentioned, the current positions we're carrying, and I'll send you away with 3 setups that I'm finding that are working well in this kind of AI breakout market. Okay. If you don't know who I am, super quick, Todd Gordon. I'm the founder of Inside Edge Capital, which is a wealth management business. Also, TradingAnalysis.com launched in 2012, which is a trade advisory research business that we did just sunset about 4 or 5 months ago. So 12 to 25, it was a good 13-year run. I've been doing CNBC since 2010. And actually, I just put my contract away. I just got signed for another 3 years at CNBC, which was really cool. Before that, I was a hedge fund trader at Gain Capital Asset Management during the global financial crisis. A lot to talk about that. I was also a senior technical analyst for the other company at the same time, their parent company. Prior to that, I was a proprietary trader, trading NYSE stocks and NASDAQ stocks 2001. Before that, I was a ski racer with a side business of economics. I knew I wanted to be a trader coming out of school. I was an economics major at St. Lawrence, ski D1 there. So, I've been in the markets my whole life. All right. So, I kind of built this theme. I was building the presentation for you. I was playing Dylan, and I was like, wow, it kind of, the times are changing, kind of works. Plus, I don't know if you saw the Bob Dylan movie. I thought it was really good. I saw it in an airplane. I thought it was good. So let me turn this one off. This is The Hurricane, another good song. So here we go. Come gather around people wherever you roam, and admit that the waters around you have grown. Bob Dylan. So, over the years, current state of the markets and our business has risen and shifted at TA. We surf those waves together, pun intended. I know a lot of you like the Elliott wave theory. Now at Inside Edge Capital, we're navigating the same waters, but new tools, analytics, structure, but the same drive, discipline, and shared mission. All right. So just a little background here. TradingAnalysis, which most of you probably know. If you didn't, no problem. Launched in 2012, market research, trade advisory, signal service. We literally transact with thousands of traders and investors around the world. Business was good, but for me, it was too transactional. It was not fulfilling enough. Okay, and it took me going to wealth management to realize that. Basically, we had so many cool people coming through the doors, but the nature of the research business, where I sit here by myself like a loser, not talking to anyone, just focusing on the markets, putting out content, trying to build my own trading accounts. There's so many people that were coming in and out of my doors at TradingAnalysis I didn't get to know and didn't get to meet and appreciate, the quality of person or trader that, came through our doors. And I'm not being patronizing. It took me going to wealth management to realize that. Okay. So, for 4 years, we overlapped Trading Analysis and Inside Edge. And if you look closely, I think you can kind of see the similarities between the two logos, specifically the two letters with the swoop around it, right? But the C there is for IE cap, and you can see we're a ski-themed business, so you can see the mountain there. Anyways, so we're a boutique digital wealth management firm. We are just about to go up to SEC, where we are state registered, but our assets got to a certain level where we go up to SEC. We're active portfolio management, comprehensive financial planning. I do the portfolio management. Kyle Wasson, who's a CFP, certified financial planner, he does all the planning. The two together are very, very important, especially for today's active trader and portfolio, investor who wants to have an actively managed portfolio. At different times, we take more risk. Other times, we scale back, but it has to fit within your financial plan. Built on the same principles taught at TA, but much more fulfilling, as I mentioned. I get to work one-on-one with clients. We get to know the cool people that have worked with us at TradingAnalysis, that have come over to Inside Edge, and it's really pretty cool. The quality, caliber, intelligence of people that work with us, getting to know our clients at Inside Edge and helping directly enrich their lives by getting them in the markets, actively manage their portfolios has been awesome. All right. You better start swimming or you'll sink like a stone for the times they are. I mean, I'm not even going to try to sing, but you better start swimming or you'll sink like a stone. I think that's like the truest Bob Dylan slide that you'll have here. TA was launched in 12 after we went through the 2008, 9, and 10 global financial crisis. And I learned firsthand that I am, my personality, my mind, my outlook in the markets, I do like, and I was able to thrive in those highly volatile markets. So, born was Trading Analysis. And it's kind of funny, Inside Edge was launched in 2021 after COVID, after 20. And then as soon as we launched in October 21, then we went up. And then in 2022, the market got smoked as interest rates and inflation spiked. So kind of born from two crises was, my research and wealth management business. And, we handled both bouts of volatility quite well. So I'd like to kind of share that with you. Inside Edge, our next revolution, reaching out, taking our clients by the hand, pulling them upstream toward the future. The AI tide is rising fast, and we're not drifting with it. We're staring into it, helping investors find their edge in the flow of change, which is really where we're at. This is a slide from the live stream. If you follow us on Thursdays, CBC did a really nice video on it, and it's linked right there. Just the inner web of all the companies that are investing in each other as artificial intelligence is built out, and all the infrastructure and the energy behind it, and all the pipes and the picks and shovels that make up the artificial intelligence build out. It's quite amazing. And OpenAI, what's the valuation of that company? I don't know, 500 billion, 750 billion. Is it $1 trillion market cap private company? It's amazing how it's all happening. So if you can get a hold of that video, certainly watch that. So, there's so many sort of knock-on effects with this AI build-out outside of just technology. Off the top of my head, industrials, the picks and shovels, the cooling, the transportation, utilities, the power generation. We're looking at, natural gas and solar and wind and, other fossil fuels. Like, there's so much that goes into powering this AI build out. And the IEA, International Energy Agency, says global electricity demand from data centers is set to more than double by 2030 to 945 TWH. I should remember what that is. Terawatt per hour or something. You probably know. With AI as the main driver. Okay. So you can see the expected increase in demand of electricity for the data centers. This is a cool graphic from IEA of a data center. Network connections, cooling. You get the racks of GPUs in there, the backup generator. They're going nuclear out there with the SMRs, grid connectivity, the uninterruptible power supply, UPS. Like, there's so much that goes into it. It's unbelievable. This I've referred to multiple times, but Philippe Lafont, he is the head of Co2, which is a tech-based hedge fund. I think they have about 50 billion AUM. He's a very good tech mind, and their presentation here, which is also linked, showed the waves, the ebbs and flows of the various tech builds out: mainframes, PCs, network, desktop internet, mobile internet, cloud, SaaS, which is software as service, and then the AI build out is really just getting started here. Different topic we'll talk about in the webinar, but is basically making the point that the productivity of AI is inherently deflationary, which takes the pressure off the Fed, which allows us to keep rates low, but also allow us to grow out of our debt and start to get the deficit back to levels where it should be, lowering the debt to GDP ratio. So a lot of potentially good things that are happening here. The technicals are lining up with the fundamentals. You take a look at Nvidia. I mean, split adjusted, in 2023, the stock was at 10 or 14 bucks. We're at $183. You look at the sales growth of this company, which is arguably the most historic, important company, maybe since Ford, maybe since the first automobiles came online. 26 billion in revenue in 22. 2023 was 60 billion, 130 billion, 206, 274 billion. I mean, they went from 10 to 20 billion to 274 billion expected next year in revenues. And what's crazy is the profitability of it is just insane. They're running a 78, 80% gross margin. EPS gone from $1.19 in 2023 to $2.94 last year, expected to make $4.39 up to $6.07. And these are GAAP EPS. These are not non-GAAP. Okay, so the non-GAAP are going to be even bigger than this. The growth is just insane in this. This is the granddaddy of the AI trade. And if you look at, the revenue growth, as I mentioned, 2020, 22, 24, they're making 10, 16, 20. And then when you start to look at the scale of revenue expected here, this is this year, 130 billion. And these two are two different sources. So 130 billion, actually those match. 2024, 130, and then 2025, 206. 130, 206. Looks like we're off by 1 year. Again, two different sources, but you get the point. 275, 325, 353, 375. This is the revenue year over year percent change. Again, a $4.5 trillion company growing 50 or 40% top line revenue growth is just insane. And, there's metrics and there's different ideas out there that these future expectations are understated. Okay. And I mentioned that the company is just wildly profitable. Look at the free cash flow figures here. So in orange is the actual free cash flow in billions. Look how small it was. And then look at the ramp in 2024, 25, 26. And then look at the percent change in free cash flow generation, free cash flow margins increasing. Like, it's just companies, it's probably trading 35 times next year's expected earnings, which is crazy cheap. So, there's a lot of macro overruns that we'll talk about in the webinar. A lot of you know me from the Elliott Wave world. I'm still doing Elliott Wave. I kind of am doing it in the closet. I think just long-term, you don't need to smother the count because it's long-term bullish. If you look at down here on the, I guess that would be the x-axis down here, and then look at the y-axis vertically. We're going to have some bumps along the way, but long term, I think, we may go into the equivalent of, a sideways consolidation, perhaps like the 70s here, maybe, I don't know, 2050, 2070, 2100 before we eventually go up and make a high. And if you just keep in mind that the y-axis is a semi-log, I mean, the Dow can go significantly higher from here. And again, those of you know Elliott Wave, look at the distance of 1, look at the distance of 3, and you can see that 5 is currently quite abbreviated. It has room to go. This is the Dow on a little bit more detailed chart. I captured this when the Dow was 36,000. It's probably 45, 46,000 now. I see the Dow in the next 10 years going up to 100,000. I think this is going to be very AI driven. Here's the monthly chart, the breakout here. I captured this, I don't know, a year or two ago. And we're right about here, 46,000. And we don't really have any resistance until we start getting up into this zone. So I think this is going to be AI driven. There's going to be massive value creation, trading opportunities that, is going to carry us higher. Even today, like, I was scanning, and the software that I'm using now that I'll show you in the webinar is awesome. I've never been like so. I don't know. It's such a powerful, impressive suite of software scanning to find the best stocks, both technicals and fundamentals. I just fully jumped into it. It's amazing. I'm like, oh, let's see what this stock, Better Home and Finance Corp, Better Home and Finance Holding Company. I said, what the heck? It sounds like Better Homes and Gardens, like that magazine. I was like, what is this? I have no idea. So I did a scan. I looked at this thing. It's ripping to new highs today, trying to break through 100. I was like, what is this company? It's the first AI-powered mortgage. Our tech unlocks lower rates, higher chances of approval, and a lightning-fast process from approval to closing. Over 100 billion funded. Like, this is just, again, this is right off the press, like from 2 hours ago. So as I'm saying here, we're in the next industrial revolution driven by advanced computing that will displace so much antiquated technology, redundant costs, capital's flying to these companies at breakneck speeds. Like, there are so many trading opportunities here that this is what we're going to talk about. Like, I'm running longer term portfolios, right, in Inside Edge, but the one that I want to focus on this Thursday called Active Ops, like, I'm doing some new stuff in here that I want to introduce you to. And those of you from Trading Analysis, I want to show you how I'm increasing my speed of research, how I'm trading these sometimes not profitable companies. I mean, you look at this thing, you know, this one's only doing 180 million in revenue this year to 280 million. Far from profitable, but the kind of market we're in for now, there's a ton of momentum behind these AI, quantum, energy producing companies that are going to push the AI trade forward. So it's kind of an amazing time right now. This was one, if you watched the YouTube video a little while ago, this one is Bloom Energy. So what they do is they're literally they're co-located power generation boxes. They're called Bloom boxes. Supply always on electricity with lower carbon emissions than the grid. They can run on hydrogen with zero emissions to hospitals, factories, utilities, and you guessed it, data centers. In fact, Bloom just signed a deal with Oracle to supply data centers. So I put this out, I don't know, a month ago. I said the stock was at 75. We should be able to go up coming out of wave 4, go ahead 100, 150. And you can look at, you know, some of the growth we went here. So from 37, let's go down here. 3, it's too small for me. So you could probably zoom a little bit more than I can. Actually, let's take a second here. We got a minute. So this is the annual, oh, come here. Is the annuals. So 203 million to 282 this year, expected to go up to 700 million. That's a 150% increase from this year, which is expected to go 282. So long ways to go. I mean, again, this is not this is a momentum-based trade where even unprofitable companies are ripping higher. So you've got to be quick on the trigger to manage risk. So again, I mean, looking for the upside technical 75, looking for 100, 150. We just hit 100, went up to a fib projection, backed off, holding resistance now as support. I do hold the stock in our active ops portfolio. It's up 25% right here, so up 30,000 bucks on this one. And you know, we'll see. I'm going to manage, but I'm wondering if we can get up to that 150 target. But this is just another example. So as the present now will later be past, the order is rapidly fading. For the loser now will be later to win, for the times are changing. So the losers now that are not profitable yet, but the kind of market we're in, the markets are pricing those in that they become profitable. But until such time between now and then, there's a lot of, you know, price appreciation that can be captured. Markets evolve, platforms change, and technology advances. And that's what we've done from the transition from trading analysis into Inside Edge. Our discipline, our approach to risk, and our belief in being prepared, those remain constant. The times are changing, but our edge remains sharp. So we're going to do a full webinar Thursday, 8 p.m. 8 p.m. Eastern, 5 p.m. Pacific. It'll be on Zoom. Be sure to sign up. There should be a link below here in this email where you found it. And we'll see you on Thursday night. All right. Thanks so much. I hope that was a very quick and helpful little bit to get you excited to hang out Thursday. We're going to have some fun. I haven't done one of these in over a year. I love doing these. So Let's do it. All right. See ya.